Hi there. How's your money? We're back again with yours truly, Cryptoella. Global stock markets have been on high alert as crisis hit Chinese giant Evergrande faces a key test this week. The value of the world's cryptocurrencies plunged to a low of less than $1.9 trillion by 8:45 a.m. Eastern Daylight Time on Monday, nearly 11% less than 24 hours prior, and reflecting a loss of more than $250 billion, according to crypto data website CoinMarketCap. In a Monday note, Jonas Luthi of digital asset broker Global Block said the sudden pullback occurred after shares of Chinese real estate giant Evergrande, which has more than $305 billion in liabilities, plunged to their lowest level in 11 years, triggering a stark sell-off as analysts warned the company's potential collapse could pose risks to the broader market. Evergrande, China's second-largest property developer, alerted banks last week that it would be unable to make debt payments due this month, sparking a sharp drop in the Chinese real estate sector. First, let's talk about Evergrande. Businessman Hui Ka-yen founded Evergrande, formerly known as the Hengda Group, in 1996 in Guangzhou, southern China. Evergrande Real Estate currently owns more than 1,300 projects in more than 280 cities across China. The broader Evergrande Group now encompasses far more than just real estate development. Its businesses range from wealth management, making electric cars, and food and drink manufacturing. It even owns Guangzhou FC, one of the country's biggest football teams. Evergrande expanded aggressively to become one of China's biggest companies by borrowing more than $300 billion. Last year, Beijing brought in new rules to control the amount owed by big real estate developers. The new measures led Evergrande to offer its properties at major discounts to ensure money was coming in to keep the business afloat. Now it is struggling to meet the interest payments on its debts. This uncertainty has seen Evergrande's share price tumble by around 85% this year. Its bonds have also been downgraded by global credit ratings agencies. There are several reasons why Evergrande's problems are serious. Firstly, many people bought property from Evergrande even before building work began. They have paid deposits and could potentially lose that money if it goes bust. There are also the companies that do business with Evergrande. Firms including construction and design firms and materials suppliers are at risk of incurring major losses, which could force them into bankruptcy. The third is the potential impact on China's financial system. Evergrande reportedly owes money to around 171 domestic banks and 121 other financial firms. The financial fallout would be far-reaching. If Evergrande defaults, banks and other lenders may be forced to lend less. This could lead to what is known as a credit crunch when companies struggle to borrow money at affordable rates. A credit crunch would be very bad news for the world's second-largest economy, because companies that can't borrow find it difficult to grow, and in some cases are unable to continue operating. This may also unnerve foreign investors, who could see China as a less attractive place to put their money. The losses quickly spread to broader markets. Alongside historic adoption measures, buzz around the digital collectibles known as non-fungible tokens, and concerns over heightened inflation have helped the cryptocurrency market pare back losses. This has happened since regulation in China sparked a nearly 50% crash in early May, though it's still down nearly 25% from an all-time high 4 months ago. Heading up market value losses, the price of Bitcoin dipped 9% to less than $42,669, while Ether prices fell nearly 10% to a low of $2,940, marking each of their lowest levels since early August. Even recently skyrocketing tokens like Solana's SOL and Cardano's ADA plunged about 10% at the height of the sell-off. As prices crashed, El Salvador President Nayib Bukele announced the nation took advantage of falling prices and bought the dip for a second time this month, spending roughly $6.5 million to boost its cryptocurrency holdings by 150 bitcoins. Regulators have warned that its $305 billion of liabilities could spark broader risks to China's financial system if its debts are not stabilized. A major test comes this week, with Evergrande due to pay $83.5 million in interest relating to its March 2022 bond on Thursday. It has another $47.5 million payment due on September 29 for March 2024 notes. Both bonds would default if Evergrande fails to settle the interest within 30 days of the scheduled payment dates. Evergrande executives are working to salvage its business prospects, including by starting to repay investors in its wealth management products with real estate. Kington Lin, Managing Director of Asset Management Department at Canfield Securities Limited, said Evergrande's shares could fall to below $1 Hong Kong if it is forced to sell most of its assets in a restructuring. There was some confidence, however, that the situation would be contained. Beijing has demonstrated in recent years that it is fully able and willing to step in to stem widespread contagion when major financial or corporate institutions fail. So, in short, that is all the news regarding our beloved cryptocurrencies today, straight away from yours truly, the Cryptoella. Before you leave, make sure you click the like button, share the video, leave a comment down below, and subscribe so you may get notified on our latest videos. Have a great one, and bye.